One of the things I look for when I'm selling options is a really good backtest, where the line just goes from the bottom all the way up to the top right. Even if it looks like this historically, where there's been this huge drawdown, to see a consistent trend in the recent times is a pretty good sign. The ticker that we're looking at today is TUP, which is the Tupperware company. And some of you might be familiar with this name because obviously the brand is pretty well known. But besides that, in the last year, it had this huge spike where there was some sort of a meme squeeze, right? There was really high short interest, and the ticker went from 60 cents all the way up to $5. But then just in typical meme fashion, it came back down to around the $1, $2 mark. And what we're looking at today is an option selling strategy here where we'll just be selling the at the money volatility. And the reason we'll be doing that is ever since we had this huge spike, we can see that we've had a really high risk premium, and that since that spike where we took a drawdown for sure, a huge drawdown, it's been pretty smooth sailing ever since. And this is what we look for, right? We want these areas where there's a reason that implied volatility is inflated, right? There's a reason that there is a risk premium here. It's not like we're just guessing as to why someone's willing to pay us. We know why someone's willing to pay us here. And for that reason, we are willing to take on some risk potentially. Given that this was a meme type stock and it's consistently printed for literally the last year, this is one of those trades that I would be looking to put on, trading basically the 30-day volatility and selling it in, small to medium size. Now, one thing to note here is as we get into it, there is a bit of a bid-ask spread, and the ticker price is very low. So we'll have to put on, 3 or 4 lots, hopefully, to get any sort of meaningful size on. And then from there, we'll have to be really conscious about our fills. We can see that the average option volume is sitting at about 7,000 almost, which is pretty good for a company of this size. It's a $93 million company. One thing that we'll have to keep in mind as well is there's a chance this thing squeezes again. So we need to consider that in our sizing. And in our stop loss as well, right? If we get stopped out really quick, we'll probably look to close out and reevaluate. But given how this thing has moved over the last little while, I don't foresee that being the outcome we get. Right? If we look since September till now, this thing's basically chopped around. And even with its biggest swings, we're looking at, when you see the premium we'll collect, we're pretty much looking at a profitable trade still. So the range that it's moved within has stayed within our break-evens on a short straddle here, which we'd be getting hopefully about 76 cents for. So overall, it's looking pretty good. I did take a quick look at some of the news just to acquaint myself with this ticker. It's pretty much exactly what I mentioned to you earlier. So I'm feeling pretty good about it. Short interest, to about 20%. It's pretty much in line with what I expected to see here. And for that reason, I am willing to put on a trade here. So let's go ahead over to the brokerage. I've already opened up the option chain here for TUP, and we're looking at the Feb 16 contracts, which is about 38 days out. And we're going to construct a at the money, which is about the $2 mark, an at the money short straddle. So let's go ahead and build that out here. Let's close out some of these. All right, let's see here. At the money short straddle, we're going to get somewhere between basically $1 and $1.20 for it. We'll obviously start up towards the $1.20 mark. And what we're going to do from here is let's try and get a fill on maybe 3 lots here to start. Transmit that order and no fill. Right? It's unlikely we're going to get a fill right at the top there, but we always want to start there, start working our way down. No fill at the $1.14 mark. Right, and really, I think I'm pretty good with any fill here. Over a 30-day period, the odds of seeing more than a dollar move is pretty low. See if we can get $1.05. No luck, no luck. Maybe we'll let that sit for a few seconds here while we wait. Let's see what else we can get. Mid is it's obviously the mid's coming down as we go, but the ask is at 96 cents, so I'm thinking somewhere around $1 we'll be able to get a fill for sure. And no such luck. All right, I guess we're going to have to go ahead and hit the ask here. One thing to keep in mind is that we are going to have to probably hit the bid to get out of this trade. So we're going to be crossing a pretty big spread on this. Now, typically, like if I get more lots, I'll probably let it sit for a while and try to bring up that average fill. But for the sake of showing you guys getting these trades on and how we're going to manage them, we'll go ahead and just get that fill here. And we will just roll with that for this trade. All right, so there we go. We have this trade on. I'll post about it in the Discord now, and I'll put this video up as soon as it's ready. If you have any questions about this trade, feel free to leave a comment on this video or go ahead and reach out to me in the Discord. I'll be there to chat with you about it. All right, everyone, take care and good luck.